Welcome, everyone. This is Todd Brow with Senior Insurance Marketing, and we are going to talk about UNL Dental and Vision standalone product. It's called the Dental Vision Shield, and we have Rush Holson on the webinar today. He's going to tell you all about their new Dental Vision Shield program. So, Russ, take it away.
Yeah, thank you, Todd. I appreciate it. I'm going to kind of let Todd run point on administering this whole thing. We're going to be pretty quick today. The plan isn't particularly that long to explain. I could explain the benefits in 3 minutes. So what I'm actually going to spend the bulk of our time doing is talking about why we have a standalone dental vision product and what the market kind of looks like and what sets us apart. So kind of with that in mind, I'm going to spend 5 minutes kind of going through the history of dental vision insurance and why we think we can be successful where others have failed. So dental vision is, of course, different. Dental vision is different from a lot of the insurance that we sell insofar as a lot of the supplemental products that you sell, you've got to convince somebody that they need it. You know, a lot of times selling a cancer product policy, they don't think they need cancer insurance because Medicare will cover them. Same with home health care or long-term care. Or they don't think they need life insurance or whatever that may be. You've got to show them that they have a need for it. And then once you create that need, you can fulfill it with the product that you've got. That's not really the problem with dental vision. Everybody wants dental vision. The problem out there is there just aren't any good solutions. A lot of the dental vision plans out there aren't worth the paper that they're written on. And there's a reason for that. As I've told others in the past, there is a certain small level of arrogance for tiny little UNL going into a space where other much, much larger insurers have failed, not just failed, but failed in somewhat spectacular fashion. And there's a reason for that. Something that I think that we understand that other companies don't understand. And that is dental vision insurance is different for one very specific reason that's also very important than all other types of insurance. People buy cancer insurance, major medical, Medicare supplements, home health care, whatever insurance, homeowners insurance, auto insurance, they buy it hoping they never have to use it. No one has ever bought an auto insurance policy and said, man, I hope I crash my car today so I can file a claim. However, as those of you know on the call, people buy dental insurance for the very specific purpose of using it. And while that distinction might be small, it's very, very important. Because what other companies have done in the past is they use what we call they model the products like they model all of their other supplemental products. So I'll use cancer insurance as an example. They'll put what we call an inside limit in there, right? So you buy a $20,000 cancer insurance policy, you pay into it for 20 years, and you get diagnosed with cancer in situ 20 years later. Well, there's some red tape inside the policy that says if you're diagnosed with cancer in situ, you only get $5,000. Well, there's really not a lot you can do. The policy says that that's all you're entitled to. You can either take that or nothing. You've paid into it for 20 years, and that's what we call an inside limit. And the insurance company makes some money on that particular policy, right? And they use those same ideas doing dental. Well, here's what happens with the dental insurance because people buy it to use it. They go, we'll use another company's out there as how their claims work, right? So they'll go out there and they'll buy dental vision coverage, and 6 months later they go to the dentist and they get $1,000 root canal. Or a year later they get $1,000 root canal, thinking, I got 80% coverage, I should get $800. Well, what they don't understand is that policy pays benefits on something called usual and customary charges or reasonable and customary charges. And so while the procedure might have been $1,000, the quote unquote usual and customary charge for that procedure is only $700. So you're going to get 80% of $700, but you have to have the policy for 3 years before you get 80%. In the first year, you only get 60%. So you're going to get 60% of $700, which is $420. $420. And then there's a $100 deductible, so you get a $320 claim on a $1,000 root canal when you're expecting $800. What does that individual do? They cancel. And that's a lose for everybody because the agent gets a charge back, the company loses money because these products have to stay on the book for a pretty significant period of time for people to make money. So the client loses, The agent loses, they get a big chargeback. They got to go out and write. They can never really build a book of business because of chargebacks. And the carrier loses, they don't make any money. So what does the carrier do? They do what all other carriers do. They raise rates and lower commissions. So now you've got this bad dental product in your briefcase that doesn't pay any commission. And you're going to upset your client if they use it. Are you going to offer them that product? Of course you're not. What you're going to do, what I did when I was an agent for 10 years prior to coming to UNL, is when somebody asked me if we had dental vision, what did I say? I said, Mrs. Smith, I'm going to be perfectly honest with you. I do have dental vision. And you know what? You don't want it. It's not worth the paper it's printed on, which is always, I've thought, a very somewhat savvy sales move, in that you're building trust with the client by saying that. They're relieved to hear an insurance agent tell them not to buy something that they have, and it builds credibility, and you're doing your client a service. And that's kind of been the history of dental vision insurance, and it's been wash, rinse, repeat for 20 years. And it's for that one specific reason of claim expectations not meeting claim reality. So now we're going to go talk a little bit about UNL. I think most of the people on this call are aware of UNL. Just a real quick background. We've been around for 55 years. We're B++ rated by AM Best. We are a smaller carrier, but we get all of our back office administration done by Guarantee Trust Life. They serve as our TPA. So you get all of the benefits of doing business with a larger organization, as well as doing business with a smaller one, insofar as we do give that small business feel. We touch every app that comes in the door. We make sure that they're filled out properly before we send the new business, et cetera, et cetera, et cetera. So here's how the plan works. What we did, the most important thing about our plan when we built it, and we weren't going to build anything that did, if we couldn't do this and make it actuarially sound, we just weren't going to come out with one. So the most important thing to know is UNL is going to pay its claims based on actual charges. This is a huge benefit for your client. So no matter what the charge is, they're going to get to the extent that it's a covered procedure, they will get 80% of the cost of that procedure. So in our same scenario there, they get a root canal done, they will get 80% of that root canal. So they'll get $800 if they've met their deductible for the year. We do have a $100 annual deductible. We're of the opinion that that's not going to be a problem for persistency, because most of our clients are in the senior market. They've been paying deductibles their whole lives. They understand that. So no one has really a problem doing a one-time $100 or once annual $100 deductible. Your clients are going to have three benefit options. They can do $1,000 a year, $1,500 a year, or $2,000 a year, meaning that's the maximum benefit they're going to get on an annual basis from the plan. In addition to paying on actual charges, we do offer $350 of annual wellness benefits. And we'll get into that here in a little bit, exactly what those wellness benefits are. And just as important as anything else, there are no networks. Your client is entitled to see whatever dentist is that they want to see. So we have waiting periods, just like every indemnity product on the market. And the reason that we do that is so we don't have to do any underwriting. The waiting periods essentially are the underwriting. So once you've had the plan for 3 months, you go get your x-rays done, we'll pay you 80% of that. We're going to pay you $75 twice a year to go get your teeth cleaned, and $50 a year to go get your vision checked. So that's part of the wellness benefit. $150 from the cleanings, two $75 cleanings, $50 from the vision check. So that's going to be $200 of your wellness benefit right there. Once you've had the plan for 6 months, you're entitled to $150 in glasses, or contacts. You can do that every single year. And that's how we get the full wellness benefit. That's how we're getting the $350. We're also going to cover cavities and fillings after 6 months, pretty much all basic dental care. After 6 months, you get your x-rays, get your teeth cleaned, get your cavities filled, et cetera, et cetera, et cetera. And then once you've had the plan for a year, you're fully vested. Almost all non-cosmetic dental care is covered: bridges, crowns, dentures, root canals, full mouth extractions, et cetera, et cetera. There's a more detailed list in the outline of coverage. I'm not going to go through every single benefit because you probably don't want to hear that, and I don't particularly want to do it. And then here's some of the rates. So it's a really simple sale. You know, Mrs. Smith, we're going to give you $2,000 of dental vision every single year. You get $350 in wellness benefits every single year. And Mrs. Smith, if you're 65 years old, it's only going to cost you $46 a month. If you only want $1,200, it's only going to cost you $40 a month. It's a really, really neat product to offer your clients in terms of creating value whereas other dental plans have not only not created value, they have upset your client. We're going to give them the opportunity to enroll in a plan that does what it says, and it's going to create trust between you and the client. And that's pretty much the whole deal. I mean, I could sit here and wax intellectually about dental vision for the next 30 minutes, but I'm kind of a believer of less is more. So that's essentially the entire product. The app is very, very simple. It's pretty much paint by numbers, and then you're done. And that's the end of the presentation, unless there's any questions.
Does anyone have any questions? Feel free to text them or put them in the chat, or speak out as well too. So I don't think we have any questions, Raj. Appreciate everyone taking their time and learning about the new Dental Vision Shield standalone program from UNL. Give us a call here at Senior Insurance Marketing, 877-800-3080, and we'll be glad to help you out with contracting and applications, brochures, whatever the case might be. We're here to help you grow your business. So give us a call, 877-800-3080, Senior Insurance Marketing. We're here to help you out. Take care and have a great day, everyone.
Thank you.
Thanks.